Well, thanks so much for tuning in to the trade setup. It's interesting times indeed. Lots to talk about. Very quickly, just a quick snapshot before we get in Peter Maguire to talk about his thoughts on oil because that's the big mover. Remember, in terms of stats, key statistics, if you look at them, the European indices, the Dow Jones or the Nifty, they've shed quite a bit. European stocks logged the worst week since March 2020. That tells you a thing or two. Dow shed about 180 points on Friday and slid for the fourth straight week. For the last 1 month, the Nifty shed about 5.62% or about 9%, 950 odd points, but that may not be done as yet, simply because of the news flow. Now, Vladimir Putin has said that the war will continue. There's no sign of abating post 2 rounds of negotiations until Ukraine meets his demands. The US crude oil topped about $130 a barrel on the possible Western ban of Russian oil, and Beijing has announced a GDP growth goal of 5.5%. So much as everybody in India thought that India was going to be the lone star on growth, and even that is under question mark because of surging crude prices. There is a counter. China looks like it will grow really well in 2022 as well. So lots happening out there. But the most important variable, crude oil and its repercussions. Peter Maguire talks about all things, including investing. But for today, we'll request him to tell us about one thing that he tracks very, very closely, and that's oil and the possible ramifications. Peter, great having you. Good afternoon to you. Thank you for agreeing to talk to us. What do you think of the possibility of these Western sanction on Russian oil and the ramifications that it has for prices?
Well, I think I could talk probably for about 3 weeks on that, Niraj, and we've only got a matter of seconds. So first off, we've seen what's really taken the market by storm this morning is around about $11 or $12 move to the upside. And that really is the risk premium built into this. And all of a sudden, the whole engagement as far as what's going on with sanctions, Russia and so on is one thing that demonstrates the sensitivity with it all is oil price. And that's what the market's looking at. That's what the market's prepared to pay at the moment. We're looking at about a 127.80 handle for Brent. So when you think of where we were Friday early and where we are today, I think that answers your question. And quite obviously, I think there's further upside from here. No one can put a number at it, but the momentum to the upside is extremely bullish.
Yeah, I mean, that's the question, Peter. So do you reckon, by virtue of your years of study of oil, that there is a possibility that we may even touch 150 or higher? JP Morgan 2 days ago said that it looks like 185 is on the cards.
You know, I look at all the analysts' expectations and forecast, Niraj, and I'm not going to say anything's not achievable because of where we've seen over the last couple of years and what this whole storyline is with less capex. You're looking at tank bottoms. You're looking at the real super backwardation now. You're looking at all of these components worked in, huge demand globally, and the uncertainty when it comes to that Russia crude supply and who's going to fill the breach there. So they're a superpower, Russia, when it comes to commodities, and it's going to be very, very difficult to try and forecast a price. But yeah, maybe you do see a 150. We're only $20 from there now, and it's parabolic. So that's
It's parabolic. Indeed.
Yeah, that's the situation.
A lot of reports talk about the possible return of the Iranian oil, and that might stem the flow a little bit. And there are counter reports which say that Russia and Iran might be working together as well. You understand geopolitics really well. Tell us about the role that Iranian oil can play for or against this parabolic rally.
Well, it can play a for, we know that, because it'd be more production coming to market. It depends on where those sanctions lie as regards to Russia moving forward. You know, where a viewpoint is today could be completely changed by Thursday. So there's the story that's hard to quantify how much of that 12 million barrels a day of production that Russia contributes to the global demand picture. Say we consume 100 million barrels a day in round numbers for the viewers, and Russia's producing 12 million. So if they knock it down to 6 million or 3 million, who's going to pick up the the excess capacity. Who's going to supply? Iran might come to the party with a couple of 100,000 barrels, might even produce 750,000. But that's a big hole to fill, and that really creates much turmoil across the oil complex, Niraj. And far smarter minds than I would be looking at that and realizing the opportunities that are presenting themselves. Have a look at that graph. I mean, it's just a dramatic $70 to $130. It's nearly doubled in price in 2.5 months.
Yeah, it's looking slightly difficult and iffy. But Peter, understand we have to let you go, but thank you so much for joining us for this very quick update. Much appreciate your time.
All our best, Niraj, and to everyone, thank you very much. Take care.
Take care. Yeah. That's indeed the two most important words currently. More so if you are in the front lines and getting impacted massively by what's happening in the Ukrainian region. Now, from an investor's perspective as well, right? There's a battle to be fought simply because the U.S. markets did slide in Friday's session. The futures, as we speak, of all markets, whether it's the U.S. markets, and there you can see the third column, which is a 1.2 or 1.5% drop. So the US futures are down that much. The Asian futures are down about 3.5% apiece. So we have a sharp gash in Nikkei, the Hang Seng, almost everything which is an all-importing country will have these issues. And I think India is no different. So everybody, if you were penciling in some support at the current level of 16,250, because that was a key one, I'm afraid to say you have to look at the next support. That's the thing about these technical supports, right? You slide down and then you look at the next one. I mean, at point of times, from a technical chartist perspective, these are crucial. But from a fundamental investor's perspective, they don't matter as much. So we are going to start off really, really low. We're actually likely to start off at the next cluster of supports at 15,800. And I don't know if even they mean anything, because frankly, crude oil at 130 is terrible for Indian macros, right? So like I said in the trade support, and I wrote it in the morning, but I think this statement holds no importance. The next support at 15,800, or maybe we find support, but this is bad news. So that's the trade setup. Look out for 15,800, but it may not mean too much. I think if you are indeed looking to buy, because remember, viewers, I think a lot of advisors, and I got a flurry of these messages on the first day of the war happened, that, oh, I'm going to be brave and I'm going to come out and buy because 1 year from now I'll be smiling, and I hope everybody is smiling. But tactically speaking, today is a better day to buy than what it was on the first day of the war. And who knows, 1 week from now, 2 weeks from now, it might be a better day than today to buy. So I'm not scaring you one way or the other. All I'm trying to tell you is that if you're thinking of buying, there is carnage across the world, right? There's carnage across the stocks hemisphere. Try and buy companies which are in the non-commodity linked baskets, simply because you don't know the margin impact that comes into some of the commodity linked companies over the course of the next couple of quarters. Even if crude is at 130 and if crude oil is at 100, that is terrible for a bunch of these specialty chemical companies or commodity companies which get impacted by virtue of what's happening to Hindalco or the metals, aluminum, steel, etc. So just be mindful of that. If you are indeed to look buying companies in the portfolio side, try and buy companies which are not linked on the commodity side. That is your best bet. And I really find it difficult to see short-term pullbacks in upstream stocks. Friday was a day when some of these oil upstream companies or even some of the metal companies had a bit of a pullback. Maybe at least the oil upstream did. Even if crude were to cool off to 115 or 110 or even 100, the margins and the results that will come in from some of the upstream companies, including possibly Reliance on the oil and gas side, will be very, very strong. So, I think all dips will be bought into. So keep that at the back of your mind. Equity flows were terrible. Nearly $1 billion sold in 1 day alone by the FIIs in Friday's session. DIs bought about 4,700 crores. I think at some point of time, if this war situation continues, then the DI buying will ebb. So let's hope this situation diffuses. Actually, more so on the humanitarian grounds, but even otherwise, let's hope the situation diffuses. Stocks to watch, TCA is a bit of a disappointment, really. The buyback for retail investors, details were out. The acceptance ratio, 7 for every 50 held. That's close to about 15%. I think the street was anticipating about 20 shares to 50 or slightly more than that. It's a bit of a disappointment for TCA's retail shareholders who bought in the hope that they will tender a majority of their shares at the price of 4,500. That ain't happening. The majority ain't happening. That's the point. PNB Housing Finance, the company is considering raising funds by issue of equity shares. Keep this at the back of your mind, though I don't think today it matters. But I do want to bring what matters today. And you made use of brokerage notes to try and lay out the point that I want to convey. And these guys are smart guys, so therefore it's important to highlight their thoughts. So first, the Morgan Stanley note on Reliance Industries. They have an overweight rating with a target price of 2926. The rationale, viewers, is not wrong. They're saying that Reliance is net long oil to gas differentials and benefits when oil prices outperform gas, as seen in 2022. The demand-driven rise in oil benefits Reliance as global air travel comes back. Remember, Peter was saying that the demand for oil, because the world is opening up, is large. And frankly, ask yourself and look around you. Despite all of this, if you get a chance to do a safe holiday, are you going to grab it or no? I think the answer is a yes. So oil demand is ripe and strong, and that benefits Reliance, oil and Reliance. The tightening chemicals market and higher domestic gas production also helps negate the derating in technology multiples, which also seems logical. So Reliance is kind of cushioned on the other side. It's kind of present at both ends, and that's probably good for Reliance. So it will probably fall a lot less than some of the others, even in the session today, I would guess. Morgan Stanley's view on Asian Paints, they're underweight with the target price of 254, which is around the current market price. But they're saying that the rise in Asian Paints raw material basket, which is crude about 16%, coincides with weaker relative stock performance. And it's underperformed the Sensex by 9% in the past 1 week. They believe that the raw material price movement should remain an important stock driver in the months ahead. Simply put, if the crude pricing continues to be adverse, no matter how great a company Asian Paints is, and it is, for the near term, there is pressure. So I know Gautam Dugar said in his interaction that typically if you buy Asian Paints during periods of crude outperformance and Asian Paints underperforming when crude prices move up, in the longer term, you make money. My question is, I'm not doubting that at all. And I'm the first one to say that you can't time the market, but you've got to be a bit more tactical when the news flow around you is like this. Maybe it might be prudent to buy an Asian Paints or some of the others when the trend changes, and you can then buy it when there's an up move. Better to buy it 10% higher as opposed to buy it and then see it correct a little bit. I might be proven wrong, but just keep in mind that this is a bit of a pickle when it comes to Asian Paints. The other one is Jeffries on Hindalco. That's the other important one, which is they've made a buy with the target price raised to 700 from 660. They say that the rising global energy prices and concerns on Russian supply have fueled a significant rally in aluminum, a 3-decade high. And on the back of that, they raised the EPS estimates by 5 to 11%, and they see further upside at spot. If indeed it's the spot prices stay, then there could be more than a 5 to 11% upside on higher aluminum prices. So watch out for that. Watch out for Berger Paints, ONGC, and the ethanol stocks. Remember, sugar and ethanol, I call them ethanol stocks now because they're more ethanol than sugar. They've been withstanding pressure very well. Even in Friday's session, I think some of these stocks stood out. They didn't crack as badly. So watch out for those. And lastly, viewers, we leave you with two charts. One, if you thought oil was the big one, then watch out for wheat. Look at that. The wheat prices, the Chicago traded wheat futures have spiked at an even faster clip than oil. Now, this could be tough news for companies which have wheat as an input, some of these FMCG names, so watch out for that. And the only game in town, viewers, is volatility. If you can bet on long volatility, maybe it will help, but just look at that. Volatility gauges across asset classes. I mean, you look at any index, JP Morgan VIX index, the CBOE VIX, West Texas Intermediate second month volatility, every gauge has spiked. It is extremely volatile, it's extremely choppy, and from what Vladimir Putin has said in the last 24 hours, it doesn't seem like volatility will end in a hurry. So watch out for the macro development. Don't focus as much on the micro. This might well be a year when the macro investors come into the fray. Thanks so much for tuning in. Have a safe day. If you're stepping out, try and stay masked up. And let all of us say a prayer for everybody involved in the humanitarian conflict in the state of Ukraine.